Let's bring in my panel. We've got joining me in studio today Alex Jones, who's from Randstad, and Simon Boulton joins us from Aequalis. We've also got Peter Gleeson on the line, or on the camera, from Brisbane. There you are. Hi, Peter, we can see you there too. Let's go to you first. And we always have a bit of fun with these numbers every month, don't we? There's always some surprises. We didn't get the surprise in a 5.1% jobless rate, but underneath that, all of those full-time jobs being added, what's that about from where you're sitting? You're on the coalface. Tell us.
Okay, yeah, well, thanks, Brooke. Look, I think it's a bit of an adjustment. We thought this was going to happen last month, but we actually saw the reverse with a lot of part-time jobs being introduced, and in fact, I think we had a fall-off in full-time jobs. That's happened the last 2 months. The bottom line is that there are still a lot of people wanting more work. We've still got a very large underlying underemployed. It's 7.4. It's back. It's actually higher than it was during the GFC. So close to 12.6, 13% of the workforce is either unemployed or underemployed. Look, the bottom line is 46,000 jobs full-time. Terrific, great to see. We've been waiting for it for a couple of months. Who knows what will happen in June? This often happens in June or July as we come out of the budget period and into the new financial year. So, yeah, a little bit surprised, but no more than I am just about every month.
Yeah, we've learned to keep the enthusiasm in check because it just surprises us every month. Welcome to you, Alex Jones, as well from Randstad, and Simon, as I mentioned, from Aequalis. Give us your thoughts, Alex, on where you think this jobs market is at and why it seems so hard to read every month. Tell us what you see.
Yeah, thanks, Brooke. Look, the market, as we see it, is still patchy, and I think it's, depending on what sector you're in, it'll have the results that we see there. I think from a jobs market point of view, we've seen the ANZ data come out, which is slightly weaker. To see such great growth in the full-time jobs is fantastic. I noticed there that the Queensland unemployment rate has risen quite significantly, so it's definitely varying state by state. If we look at Queensland, for example, I think we're talking about the government austerity measures that are going through there. So it's interesting how that's going to play over the next couple of months. But all in all, it's great to see that positive sentiment around the full-time jobs, and especially if you link that to GDP, hopefully that positivity will continue to flow through to the new financial year.
Simon, some thoughts from you?
I think we've got to look at the long term again, Brooke. It's, these monthly figures are a bit sort of spiky. And again, I think the doomsdayers and the cynicists out there, things are still good. We've only got 5% of the population unemployed. The trend on these figures has been fairly stable. It's dropped below 5, it's gone to just over 5. But in the longer term and looking at the historical figures here, it's still good news. And I have to say that those doomsdayers, it's not as bad as I think everyone's saying. People are cautious. Last time I think there was a knee-jerk reaction to some more significant changes in the economy. But now people are just sort of prepared, thinking. Nobody's really making big moves.
I know people blame the media for all the doom and gloom and all the doom-saying, but a lot of it is coming from corporate Australia, from bosses of major Australian companies that are coming out, and they're willing to be very downbeat, not very downbeat, maybe very cautious in a lot of their commentary. So you guys must see that from where you're sitting as well, when you're liaising with employers.
Yeah, I think that there are some headwinds in the global economy that people tend to focus on, and the strong Australian dollar does have an impact on that. So I think for those corporate Australia, they are facing some productivity challenges. So I think they're being a little bit cautious on where they want to invest. We're seeing a lot of organisations talk about transformation and restructures. I think they're just trying to align their businesses to get the best out of what is still an uncertain economy. And if you look at those longer trends, I guess that's what they're trying to see and where it will really go over the next couple of quarters.
Yeah. Simon?
Revenue growth is hard, Brooke, so it's cost management that I think a lot of these organisations are in.
Yeah.
So whilst the revenue is hard to get, they need to reward shareholders and keep the profits up by reducing that cost line. So I think that's the biggest pressure that the CEOs and boards of the organisations have at the moment.
Peter Gleeson, who's with us from Channel McLeod in Brisbane, what are you seeing in terms of market activity at the moment, whether people are willing to move around, the confidence they have about the jobs market? Because again, just going back to the fact that we seem to talk about doom and gloom all the time, but maybe that's not exactly the picture of what's going on.
Well, Brooke, I'm definitely not a doomer and gloomer. However, we've got to kid ourselves. There's a significant lack of confidence in the marketplace at the moment. As both of the other panellists have said, cost reduction, or at least risk management, is really high on the priority list. the ability to be agile, the agility of the workforce, therefore the part-timers and the temporary workers, is on the increase. We're seeing our contracting and temporary numbers are actually increasing, although not at the rate we'd like them to the detriment of full-time roles. So this is actually an interesting, I think it's just to catch up. There haven't really been many full-time roles created in this whole of this 5 or nearly 6 months, this half. So I think the bottom line is that organisations are still pretty nervous. As far as the candidates go, they are definitely sitting on their hands, basically waiting to see what's going to happen worldly-wise. Now, a lot of them actually already had job moves this year. Hasn't quite worked out the way they'd like it to work out. So, our job is much harder in trying to broker the employment process, if you like, because employers are uncertain, candidates are sitting on their hands. It makes for a really challenging situation.
And actually, Alex, in the recent Randstad, you run yearly Randstad Awards, that came out quite clearly. Peter's saying people just sitting on their hands. You found that job seekers' values are really changed this year compared to last year, didn't you? That caution's very evident in the job seekers. Yeah, so Randstad runs a yearly survey of 7,000 potential job seekers and their perception on companies and who they would like to work for. So very much looking around the employer value proposition. Historically, we've seen the results of those surveys have favoured towards attractive salaries or work-life balance, but this year we saw a dynamic shift where potential employers were really rating job security and financial security and healthiness of companies. So it's a real good reflection of the uncertainty in the market. If we look at our mobility index, which is another one that we run alongside that, that's at some of the lowest levels that we've seen since the financial crisis. So again, people are really adopting a wait and see. So very similar to Peter's comments, they're unsure about their market, they're therefore unsure about moving, and really just waiting to see kind of what happens over the next quarter. And again, as Peter says, it does make our job hard trying to broker those deals and kind of instigate people moving and getting that mobility up again. Simon, final comment of the day goes to you. Where are we at?
I think that retention and this cautiousness really go together. So Peter's points about candidates not wanting to move is important. But I think at the same time, there's still this trend of job seekers being cautious and employers being cautious. What hasn't happened this time is the trust bridge between employees and employers hasn't been broken. I think at the moment there's much more of a united front between employers and employees.
Compared to the GFC.
That's right, where people are just going, right, let's sack that, let's cut that. That isn't the case this time, so we're just seeing a different approach to what isn't going to be as significant event as the GFC, but still there's a bit more of a sort of concerted and co-effort.
That's a really positive narrative, isn't it? Because we're saying, oh, everyone shouldn't be so gloomy, but that actually says that we're doing pretty well, I think.
I always say that, Brooke.
Yeah. That's great. Thank you so much. Simon Boulton from Aequalis, Alex Jones from Randstad, and we've had Peter Gleeson with us from Channel McLeod in Brisbane. Thank you so much to all of you.